Alright, guys, welcome to another live stream. Today is the 2nd of June 2026. It has just turned 9:30 a.m. Eastern Standard Time. So, what we're going to do is we're going to jump straight into the charts. I am a little bit late on today's section, so I do apologize for that. I've had other things happening in the background. Fortunately, it's no excuse, but what we're going to do now is we are quickly going to mark out today's training session. So far, we're going to be looking at the liquidity levels found in the intraday. On the NASDAQ, we're now looking at the S&P 500. So we're going to quickly just sift through them. And what I'm essentially doing, I usually do this just before market opens. Fortunately, today there has been, like I said, a little bit of a delay, but I'm going to do my absolute best to not let that get the better of us. So let's mark out the current day's high found at 4 a.m. this morning, and then current day low, which is early on in New York. Right now, New York usually starts at about 8:30, 8:30 Eastern Standard Time, but I am prioritizing the 9 opening price because that is when the bond market opens, right? We are dealing with the easy futures, right? The Dow Jones Industrial Index, which you guys can see right now. Now, here we are looking at the S&P 500, and I have marked out the low of the day. Right, CPL stands for current day's low. Then over here you'll see buy side liquidity is marked as CDH, which is essentially current day's high. Right. So I really hope no one's confused. Feel free to comment down below if there is anything you guys would like me to touch on, and I'll do my absolute best to give you guys a little bit more clarity. Like I said in yesterday's live stream, which was a fantastic session, the terminology I use is my own adaptation of the industry standard. I understand that a lot of people will be well versed with RCT, and that's a good thing. It's not necessarily the best thing, but at the end of the day, you guys are taking the initiative to show interest in the industry, and I commemorate you for that. I think this is a brilliant industry to be a part of, especially now with how the world has gone more into the AI route. So we're going to give our absolute best. Alright, so looking at the charts, 9:30 is open. We are approximately 3.5 minutes into the AM section. We have seen nothing significant on the NASDAQ. The not seeing anything significant on the S&P 500 is currently showing strength and rallying towards the upside. However, if we look at the Dow Jones Industrial Index, we can see that there is a clear cracking correlations in between the Dow Jones. As you can see, it's just one massive bullish candle. And this right here is a prime example as to why I'm not interested in anything prior to 9:30, especially when we are looking at from approximately 8 to 9. I view anything prior to 9 is essentially liquidity. And what I mean by that is when the bond market opens at 9:30 Eastern Standard Time, price is usually going to want to rally for some significant sell side or buy side, because we understand that sell side and buy side are key liquidity levels, and these liquidity levels are essentially petrol or fuel for the market. The market needs to essentially refuel itself for these impulse moves to occur. So it is vital for us to stay patient, to wait for the bond market to open, and once the bond market is open, we mark out key levels like we have done on the Dow Jones. We're currently looking at our charts. Here is the S&P 500. Likewise, we have marked our current day's high and current day's low. As you can see here, sell side is below the market, buy side is above the market. And what I will do for a little bit extra reference, I will just mark out where the day has opened at approximately 6 p.m. Eastern Standard Time. Now, once again, I'd like to reiterate the fact that every single time reference I do henceforth will be Eastern Standard Time. Okay. As you can see on the NASDAQ, we have also picked up our outside liquidity being part of the marketplace. bias, we have not swept buy side, we have not swept sell side, right? So similar to yesterday, there is a correlation currently with the Nasdaq compared to the S&P 500 as well as the Dow Jones Industrial Index. Okay, so what we're going to do from here, I'm going to show you guys a little bit more of a intimate chart where we essentially look at all three of our futures, being the Nasdaq 100, S&P 500, as well as the Dow Jones Industrial Index, and section, because this is the chart that I want to show you guys. Now, here you can see we have the Nasdaq 100 on the left, the S&P 500 in the center, and we have the Dow Jones. All right, so we can see that there is a clear correlation. I've just shown you guys the chart from a big perspective, where we were able to mark our current day's high, current day's low, and identify a sell side as well as the buy side within a intraday model or intraday range. So now it's important for us. For the Nasdaq, my bias right now, I'm currently neutral. Price is not giving me any indications to want to go lower. It's not giving me any indications to want to go higher. I am just going to sit on my hands, remain patient, and see exactly what price wants to do. Obviously, but if we look at the S&P, S&P is similar to the Dow in that both of them have been rallying as soon as 9:30 open. But for right now, we would need to see some form of cracking correlation like we're seeing, but then we want to see a change in state of delivery on at least two of the three assets we are currently looking at. Now, you guys may be a bit confused as to what the three assets are. If you keep your eyes here on the top left-hand corner, you'll see that we are looking at the Nasdaq 100, center, S&P 500, and the Dow Jones Industrial Index. Now, the reason we are looking at all of these in tandem with one another is the Dow Jones Industrial Index consists of the top 500 performing stocks or companies at this particular point in time. And it essentially combines all of their average share prices to come to a valuation of approximately $21,254 US dollars at this time, or at the time of this recording. Then the S&P 500 is the top 500 performing US companies, and their average share price compounded together is approximately 7.6 thousand US dollars, as well as the Nasdaq 100 consists of the top 100 tech performing stocks, and their average share price is 30,000 or 30.4 thousand US dollars at the time of this recording. Now, if I'm looking at the Nasdaq, we can clearly see that price is pushing lower. But like I've said, it's not enough for me to want to go short in that specific market. I'd much rather be patient, just wait to see what price is. The S&P 500, I'm also going to say that I'm neutral right now. We've not seen a major liquidity sweep on either S&P or the Nasdaq. Dow Jones, however, is doing its own thing. We will look at a much bigger chart on the Dow, just to see if we've not seen a rate in previous day high, maybe previous week's high. I know that yesterday we made all-time highs on the Nasdaq 100, which is good news, bad news, completely depends on how you position yourself in your investment portfolio. But us day traders, we're not exactly affected by it too much because we are essentially day traders. We're looking to take positions to get in the market and out the market all within the same day. Particularly, or in this instance, it'll be the New York AM session, which runs from approximately 9:30 to about noon Eastern Standard Time. So we still have about 2 hours and 20 minutes left of this AM session. We're about 10 seconds sharp of the first 10 minutes, meaning our 15-minute candle has completed. Now that we have this intimate chart open, we're going to shift the focus back to a full screen to get a better picture and lay of the land. Alright. So we're going to go look at the 15-minute chart. High time frame is always good. It's all about collecting as much data as humanly possible, and then we essentially use that data to come to a predetermined decision whether or not there will be strength and weakness on the market. And the only way we are able to anticipate strength and weakness in the market is by looking at all of our assets in tandem with one another. We understand that these markets are interlinked, they correlate, and for those of you who are familiar with the term correlation, it just essentially means that it is two of the same or very similar. So if price is bullish, more often than not, these assets will all be rallying together. If price is bearish, more often than not, all of these assets will be um, declining together. And the reason we want to do that is it just gives us a higher probability of essentially being right in the market and carving out a profit. And the name of the game is essentially who owes who. Now, us sitting here, we need to adopt a pessimistic point of view. It does sound a little negative, but the reason I say it is if you view the market backwards and from a pessimistic point of view, you'll understand that you have 100% chance of losing whatever trade you decide to take. You're essentially collecting as much data as humanly possible, and each specific component of data essentially mitigates the percentage of you being wrong within the market. So the more data you're able to collect, the higher probability there is that you will be right. And to be right is not necessarily profitable in this industry. You can have fantastic technical analysis, good fundamentals, as well as quantitative analysis on your end. But if you're not a master of your own emotions and mind, fortunately, it's probably not going to end well for you. So, guys, let's stay patient, see what the rest of the session unfolds, or let's see what the rest of the session has in store for us. But right now, looking at 15 minutes, we can see that the Dow Jones seems to be running for previous day high, following yesterday at approximately 7 in the morning. Mark that out. Now, this is not a significant level that I will be looking to trade away from. I'm also interested in the range marked on the graph of this here dotted line, right? And the reason I've done that is we understand that new day open happens at 6 p.m. Eastern Standard Time. Here you can see we have a new day opening gap, which happened from 4:45 or quarter to 5 p.m. yesterday. And likewise, the opening price was at 6 p.m. yesterday. Okay, so let's once again stay patient. Now, we've marked out these levels on the Dow Jones Industrial Index, the S&P 500, nowhere near taking out previous day's low, or even current day high or current day low. So, prime example of why we want to remain patient. We're still very early on. I mean, we've not even seen the first 15-minute close within today's session. So, patience is going to be somewhat of a friend for us today, tomorrow, every single day that we decide to be in this industry. I really hope you guys stick around. I hope you guys find these live streams more insightful. If you consider leaving a like, maybe subscribing, share it with a friend if they're also wanting to get within the industry or just ultimately improve their understanding. And you guys are going to get to see in live time whether I'm profitable or whether I'm not profitable. And dependent on what my performance or what result of my performance is whether or not I think you should stick around. If you say that I am a toxic individual, free to block me, do as you please. Okay, we can shift over to the 30-minute chart. Once again, we want to keep scaling up on our time frames to collect even more data. It just gives us a much broader perspective, which is always a good thing, because we are going to be executing on the 5-minute time frame. And the reason we execute on the 5-minute time frame is because the lower our time frame, essentially the quicker the setup will unfold, but also the less time is required for us to stay in that particular position. Now, I am a day trader, meaning I am looking to get in and out within the same session, within these next 2.5 hours or 2 hours, pretty much until 12 p.m. Eastern Standard Time. Okay, so we have about 2 hours and 15 minutes, if I'm not mistaken, give or take the 5 seconds left. But anyways, so like I said, let's stay patient. Let's see what the rest of the session holds for us. But right now, guys, I am neutral on the Nasdaq. I am neutral on the S&P 500, and I'm bearish on the Dow Jones Industrial Index. Apologies for that. I'm going to change it over to bearish. And the reason that I am bearish on the Dow Jones Industrial Index is because we have seen a sweep in current day's high in the form of buy-side liquidity. Okay? Now, with my understanding, I'm not looking to buy past current day high. Okay, there is no other intraday liquidity for me to seek in terms of upside objectives, but there is still the sell side liquidity in form of current day's low, which still remains open, and that is good news for me. So, if anything, I will be looking to go bearish on the Dow Jones. I'm still, however, neutral on the S&P 500 as well as the Nasdaq Industrial Index. So, the 15-minute candle has just closed. Let's take a look at that. Right? Now, here, with the 15-minute candle with the Nasdaq, we clearly see that there is a swing low right here. A swing low that forms, remember, swing low is a 3-candle pattern. All right? We can see here that 8:45 is one candle, 9 a.m. is another, and 9:15 is higher, right? The swing point. Then at 9:30, we can see an immediate run past that specific level, followed by, and I want you guys to pay very close attention to the body of this specific candle. Not how we went past here, but we failed to close below here. All right, that to me signals a somewhat of a price rejection. We've had a liquidity sweep, so let's drop down on the low time frame and see exactly what that means for us. Okay, so we can see a liquidity sweep as well as anything already said. Right, it's absolutely brilliant how these markets work. I truly love it. I'm elated to be a part of this. So let's mark it out. We're going to look at our intimate chart. That way you can see exactly what I'm talking about with these assets being very close to one another. Now, there is a bit of a bottleneck that I can see potentially happening. And I'll break it down for you guys right now. All right. So there we can see 930. Now 930 on the Nasdaq was an immediate bearish candle. That was not the same on the S&P 500. That's a cracking correlation. It's not exactly something I want to see happen at all. But then 935, we can see both candles, both 5-minute candles on the Nasdaq as well as the S&P 500 have closed bearish. It's a great sign, right? But what I don't like about that is I need to see a swing low being violated on that specific candle where these two essentially come together. So what we're going to do here is we're going to quickly go back to our full screen. We use this full screen to see exactly if there were any common swing lows were violated on the specific candle. Right. So we are looking at 935 and we want to see exactly what 935 did. Okay, we can clearly see that 935 took out the specific swing point over here. Let's just confirm, is it a swing point? Yes. And remember guys, always look at these numbers, please, please, please. All right. Words are opinions, numbers are facts. Numbers don't lie, numbers are not biased, numbers do not care about emotion, they are not in any way, shape, or form manipulated. Alright? They are pure. So we always want to look at the candles referring to the numbers. Okay? It may look like a swing low, but if the number does not validate that, then it's not a swing low. Alright? So if we look at the low here, we can clearly see that 1:50 a.m. is the low found here. Now we want to see 1:50 being a swing low, or at least being part of that common, of that common 3-candle pattern, which we do have that, and that's good news, very good news for us. But the problem comes in that S&P 500 already rated that, which is not something I would have wanted to see, ideally. Now with the Dow Jones is looking to do its own thing. We're not exactly going to focus on Dow Jones. We just want to on Dow Jones or YM, guys. If you are still not familiar with what I mean by NQES and YM, just have a look at the symbols. These are essentially their code names. So instead of saying NASDAQ, NQ. Instead of me saying S&P 500, it's ES. Instead of me saying Dow Jones Industrial Index, it's YM. Alright? I really hope as time progresses, we're all familiar with these terms. It just makes it a lot easier, and it essentially just improves on the transparency within these live streams, and it's ultimately going to give you guys more value and much better understanding as these live streams progress. right? So let's look at yes. Now, the S&P 500, we have not seen any raid in the sell side. Okay, if we look at 935, we had a bearish candle followed by a bullish candle, and we can see that price is somewhat wanting to move to the upside, but I need to see that on another pair. I need to see that on the Nasdaq 100. Now, my only concern with the Nasdaq 100 was, like I said, that this 930 candle was a major down close candle, and that was not seen on the S&P 500. And if we look at a more intermediate chart, we'll see exactly what I mean by that. Don't be too worried about what the Dow Jones is doing right now. More often than not, when these assets aren't closely correlated, they are somewhat setting themselves for the next impulse move. And an impulse move is essentially a very strong move. An impulse move is essentially where we have enlarged candles that will either go for sell side or buy side and move at a rapid pace. We will not be in the market for too long. Ideally, all the assets once again correct themselves and are once again closely correlated, meaning they all move in the same direction. And these are the most powerful moves. These are essentially the moves that we are wanting to react and catch. So, with the Nasdaq, I'm not interested. And even if I was looking at the Nasdaq, my profit objective for the upside is that buy side level here. So even if I were to target this order block as a long, you guys can see that my risk to reward is not even going to be 1:1. It's not even going to be 1:half. It's going to be 1:1/4, which by no means, way, shape, or form is acceptable. It's not something I'm looking at. I'm not interested. What I am interested in is manipulation. To see exactly what the market does. Now, I have no idea where my text went for the Nasdaq. I guess it's just a con to having these charts so close together. But I do it this way so that you can just all see exactly what the relationship is in real time. Instead of having anything else on the chart, I'm solely reliant on technical analysis. Right? Now, it's a good talking point. And this will lead us on to our next part of the discussion, which is essentially the different types of analysis. Right? There are three major types of analysis. One is technical analysis, two, fundamental analysis, and three, quantitative analysis. All right. Now, technical analysis is what you see right here, right now on these charts. It refers to price action in the form of candlesticks. Now, price action does not always come in candlesticks. It's completely up to you as a trader to decide what type of chart or so-called language you want to look at. And that is essentially what these candlesticks are. It is, apologies, I'm trying to think of what blind people use to read. I think it's called Braille. That's it, Braille. Okay? I want you guys to think of the candlesticks as Braille. Candlesticks in itself is a language. It is absolutely manipulated. And once again, like I stated on yesterday's live stream, what is manipulated can be understood. And once it's understood, we can ultimately implement that. Now, the good thing about these, or the good thing about that phrase, is that these markets will not stop. I don't see these markets stopping regardless of how advanced AI becomes. And the reason I say that is this is quite literally the simplest and the fastest way for major institutes to essentially take your money and to make their own money. And that is unfortunately the nature of the game. It's who owes whom. Not everyone can win. Buyers and sellers cannot simultaneously win. If a buyer is winning, a seller is losing. If a seller is winning, a buyer is losing. Dog eat dog, rat eat rat. That is just the nature of the game. It is unfortunate. It is brutal. Fear not. Like I said, we embrace manipulation because we understand if we can dissect it and understand exactly how it works, we can then go and implement those exact same principles and replicate these specific onboarding procedures and implement that every single day, or at least every single weekday, because the markets are not open on the weekends, unfortunately, at least the stock industry futures, which are these three assets we are looking at right now. All right, so that pretty much covers technical analysis. That is just price action from a candlestick chart. Then there is fundamental analysis. And we're going to dive into some fundamental analysis right now, so you guys can see. Fundamental analysis is essentially world economic news. What is happening in the rest of the world? What type of news is about to come out? So in 4 minutes' time, we have job openings. Okay, job openings. Please. Now, me as a trader, I'm not exactly concerned as to what type of news it is. All I care about is its impact. And I'm really focused on high impact economic news events. I see these high impact economic news events as the perfect quote unquote excuse for these financial institutes to essentially inject volatility. And volatility is a good thing. Volatility essentially acts as liquidity and it makes the markets tick next market move. We don't want lethargic price action. Lethargic price action is essentially when price just tends to range somewhat, and all it's doing at a particular point in time is it is compounding orders. It is accumulating, and at a later stage, it will break that specific range, and it will be followed by an expansion move, which will once again be targeting some form of external liquidity in the form of current day high, previous day high, or current low, previous day low. And those are the only two types of liquidity that I am actually looking at. So if we look at the economic calendar, we can see that we have a news event coming in at approximately 2 minutes. Now, it says 4 p.m. here, don't worry about that, that's just my local time. But if we minus 6 to that, you'll get the Eastern Standard Time. So at 10 a.m. in approximately 2 minutes time, with high impact economic news, fingers crossed that we have some form of volatility injection for that move. That would be absolutely fantastic for us. But once again, we do not want to take any trades prematurely. We're going to sit on our hands. We're going to react and not react. Then, if we look at tomorrow, Wednesday, the 3rd of June, we have two high impact economic news events. One will be coming in at 2:15 my time, which is approximately 8:15 Eastern Standard Time. Now, I'm not concerned with that because I will only be taking part in the market from about 12:30 Eastern Standard Time. And then tomorrow at 10 a.m., we will once again be having another high impact economic news event that will be coming in form of ISM service or PMI. Apologies. But once again, I'm not looking at what type of news event it is. All I am concerned with, or all I'm interested in, is it high impact news events? Yes. What time is it? Is it within my New York AM session, which happens from between 9:30 Eastern Standard Time to about 12? Indeed, it does. So, let's see exactly what this news does. Now, this pretty much just sums up the fundamental analysis, and this is my FX book. They are very good at economic news events. There are quite a couple of other fundamental tools that you can use in order to see what the news events will be for that specific day, week, month, etc. Another one would be Forex Factory, but for the most part, I'm just concerned with my FX book or only my FX book. Alright, so as you can see, in the next 56 minutes, we will be having high impact news event coming up. Fingers crossed that we see some form of volatility injection. That would be absolutely fantastic. Now, if we turn our eyes to the NASDAQ 100, we can see that the NASDAQ 100 has just taken buy-side liquidity in the form of current day high. So I will no longer be looking to go bullish. I am now changing my bias to bearish. And if you do not know what bearish means, think about it like this. Alright? More often than not, you will have heard the terms bullish and bearish. Think about it like this. A bear's claws go down, a bull's horns go up. So when I say bearish, think about the claws going down. I'm looking to sell. And if I say bullish, think about the bull's horns going up. I'm looking to buy. So if I say that I have a bearish bias, I'm only looking for shorts. And when I say shorts, that means to sell. When I say long, I mean to buy. Alright? Then if we change our view over to the S&P 500, we can see that the S&P 500 we remain neutral. Okay? We have not seen a major liquidity sweep of either buy side or sell side for this particular session. The Dow Jones Industrial Index is just continuing to do its own thing. We don't mind. It's actually a good thing. We welcome that. We understand the crack in correlation. Apologies, speaking a bit too quick. will be smart money that is essentially stepping into the marketplace. All right? And it's pretty evident that only financial institutes can do big moves like this. And once again, that just reiterates the fact as to why it's so important that we are here and present for 9:30. It's not random that that candle has formed at exactly market open, being 9:30 Eastern Standard Time. Why? Because we understand that that is the bond market which is opening. So the Dow Jones Industrial Index is showing some weakness. We've clearly had somewhat of a liquidity sweep as well as a liquidity raid of this year level. We did not manage to take out previous day high, which does not concern too much. My focus is essentially on the NASDAQ as well as the S&P 500. Okay. Now that we have that in mind, we are going to stay on the intimate chart. I'm not sure why I call it an intimate chart. I guess it's just because they're so close together and we have a very good perspective as to what the current state of the market is doing. We can clearly see that I would say right now, in this very moment in time, Dow Jones is the weakest pair, even when taking that buy side. It's a bit confusing right now. Between the Nasdaq and the S&P, Nasdaq is 100% the stronger pair. S&P is not exactly playing along, but we're just going to stay patient. We want to see exactly what this particular session does. And similar to yesterday's trading, I mean, we started off pretty lethargically. Price was in somewhat over range, but I'd say as soon as 11:15 came about, or not even, it was about 10 to 11. You guys can go back to yesterday's live stream. We apologize. It was my first ever live stream. Audio was very bad. Not the camera that I'm currently using is also not the best, but I'm merely using these as feedback for myself. It holds me accountable. I'm going to be trying to improve every single live stream I do henceforth. For those of you who watched yesterday's live stream, you will see that the current setup is a little bit different. Like I said, I'm constantly trying to optimize my approach with these live streams. I'm absolutely elated to be doing this. I've been wanting to do this for such a long time, but training is extremely hard. I had not yet uncovered the skill to profitability, or I did not yet understand what it took in order to be profitable. But now that I have somewhat experience in the industry, I've been doing it for about 6 years. So it's been 6 years of hell. Well, I wouldn't say hell, but it wasn't too fun at all. I mean, really underestimated the complexity of this industry. But at the end of the day, we're out here. You just got to carry across and persevere. So if we are currently looking at these charts, we can see that the NASDAQ on the left is somewhat rejecting its buy-side liquidity in the form of current day high. You can see that the S&P 500 still showing weakness, has not yet wanted to trade towards that current day high. And if I'm not mistaken, the current day high on the S&P 500 is the day opening gap, right? You can clearly see that there is a difference here. We've closed here, and we closed at $7,608, and then we opened the price at $7,612 US. So there is a gap, right? Just follow my cursor or mouse. You'll see that's where we closed, and then we open over here. All right. Now, I'm not too concerned with the actual new day opening gap. All I really care about is the major liquidity levels, major intraday liquidity levels, and those are always only two. Okay, there's only one buy side liquidity level that I'm looking at, and there is only one sell side liquidity level that I'm looking at. So it's only two. Now, previous day highs and previous day lows, I am not too concerned about. The reason I do that is, again, I'm a day trader. I am only concerned with intraday price action. I want to be in, I want to be out. That is my personality. I'm an individual who tends to change his mind quite often, especially when we are working with lower time frame candles, which are constantly printing out new data. For a swing trader, however, they will be looking at previous day lows, previous day highs. They will be looking at previous week's lows and highs. For me personally, that's not what I'm looking to do. However, I was looking to take longer positions like in Bitcoin, gold. Those would be very significant levels for me to take. Now, like I said, majority of these live streams, if not all of these live streams, will be concentrated on intraday price action and intraday trading or day trading. For those of you who are yes, we can clearly see that the Nasdaq 100 showing strength, continuously pushing up. We are now on the 600 level. The S&P 500 is also on its 600 level. It is looking to want to continue up. If we can see a raid in that buy side liquidity, we will have taken. We will have no more upside objectives for today, and it's actually a very good time point to start. So remember what I said previously, or if you weren't and you're only tuning in now, we are currently looking at three different assets: NQ, ES, and YM. Okay, and I want you guys to also assess these markets from a majority versus minority perspective. We are always looking to position ourselves on the side of majority. So we have a upside rate on the Nasdaq. We also have a buy-side rate on the Dow Jones. So if two of three have rated its upside objectives and we cannot go long on them, we're not going to go long at all. All right. So I am bearish on the Dow Jones. I am bearish on the Nasdaq. Automatically, we have two of three being bearish. I'm placing myself behind the bearish bias or with the bearish bias because that is what majority is currently saying. So I'm going to change my bias over and we are going to go bearish. Okay. Once again, bear's claws go down, a bull's horns go up. So if I say I have a bearish bias, I am looking to go short or sell. I am currently looking to put together a short little ebook that essentially just breaks down some of the terminology that I use just so that everyone is well versed and on the same page with these live streams. And the brilliant thing about this specific ebook is you guys are going to be able to couple that with all of these live streams that we'll be doing every single weekday, Monday to Friday, 9:25 to about noon Eastern Standard Time. And you'll essentially know all of the terminology from the ebook. But then these live streams are going to teach you how exactly and when exactly to implement that specific terminology and how all of these concepts coincide with one another. That will give you an edge in the market and it will just give you a mechanical approach that you can implement every single day. And it's important to note that trading never gets easier, but you as a trader do get more skillful, you do get more experience, and you ultimately just grow as a person, both in your intellect, but also with your emotions. You are a lot more, what's the phrase I'm looking for? Mm, just think about control. You're able to control yourself a lot more. You're able to look at the market from an unbiased perspective and from a merit perspective. You're not allowing emotions to essentially hinder your decision making. And the thing with trading that a lot of people don't truly understand is how important your intellect is, especially in this industry. Okay, you're constantly working with financial institutes that understand your way of thinking, so they position themselves in a contrarian standpoint. More often than not, when you think it's going to go short and you sell, smart money is placing itself in the opposite direction. They are contrarian to your beliefs, they are contrarian to your actions. They do not think in terms of emotions, they think in terms of manipulation, liquidity, and these types of things. Now, it's no coincidence that we are constantly seeing all-time highs being broken when the world is at war. The unfortunate fact is that these financial institutes, these financial markets, the algorithm thrives off of human demise. It may sound somewhat satanic, and I truly believe this, but it's just how the game is. Cannot control it, cannot change it. We can, however, change ourselves. We can adapt to what works, what doesn't work, and that'll actually bring us onto the third type of analysis. Now, we've discussed technical analysis being our price action in the form of candlesticks. We've briefly touched on fundamental analysis, which is essentially looking at high economic news impacts. And then there is our quantitative analysis. Now, quantitative analysis is essentially a numbers game. It's all about data. It's about backtesting a particular concept over a specific range, like 1 week, 2 weeks, 1 month, 2 months, gathering information and essentially reviewing and analyzing that specific information to see exactly what worked, what didn't work. And all that does is show you what the higher probability days will look like, what you should expect from price, and what you should not only expect, because when I say expect, it refers to being or predicting what the market is going to do, and that's not what we want to do. We're essentially always trying to react off of particular levels. But likewise, if you backtest specific levels, you'll know what to wait for. You'll know exactly when to expect these levels to be rated. And all quantitative analysis essentially does, it shows you what works, what doesn't work, but also gives you a much more confident approach in the market because you now understand that so and so works at this particular time. So this is what we can expect. And you want to position yourself in these particular times. You want to wait for specific price to unveil. If it doesn't, we sit on our hands, we remain patient, and we come back the next day. Okay? So we have technical analysis, we have quantitative analysis, and we have fundamental analysis. Most important, hands down, is probably, I say hands down, it is a little in between. I was going to say technical analysis, but the thing is, technical analysis is essentially vanity if you have not done your own quantitative analysis. And once again, you want to backtest specific things to see whether or not they would work. And once they work, that's when you will be heavily reliant on technical analysis by looking at candlesticks, understanding what price action is doing at specific times at specific levels. So fundamental analysis for me does not play that big a role. Once again, I'm a day trader. I live within the same session. Fundamental analysis is significantly more important if I was in a longer term position or if I was more involved with an investment portfolio that essentially goes between 1 month, 6 months, 1 year, 6 years, these types of things. But once again, I'm not too clued up on fundamental analysis. I'm not a long-term trader. I'm not an intermediate-term trader. I'm a short-term trader. Okay, my trade actions are a lot more accurate, with more conviction and a shorter time horizon. Right. So let's look at the S&P 500. S&P 500 is very close to taking out its vast liquidity in the form of current day high. You've already seen that rated on the Nasdaq 100. If we look at the left center chart is ES or the S&P 500, just falling short of that buy side liquidity level. Now the Dow Jones has already rated its buy side liquidity level. Hence, we are bearish on the Dow. We are bearish on the S&P for the Nasdaq. Apologies. Well, and we are bearish on the S&P 500 because we are bearish on the other two. We have to be bearish on the last one. Once again, market from a majority against a minority. All of these assets are essentially running a election, all right? And they are electing which direction they want to go. It's either going to go up, it's either going to go down. So if two of them are indicating they want to now go down, or I believe, or I'd be more comfortable to go short based off of the quantitative analysis that I've gathered over years of my backtesting, the last one I don't want to go against. Okay, and the best way for me to essentially once again use this idea is if you are, hmm, for those of you who know me, I'm always referring to scrums because I'm South African. But if you have two people pushing from right to left and you have one person pushing from left to right, the two people are going to outperform the one. Hence, we want to stick to majority instead of minority. All right. So let's see what the S&P does here. Probably a good time for us to switch over to a full view. So Nasdaq, like we said, pushed past buy side. We're looking to sell. S&P 500 has not yet pushed past buy side, but we have bearish bias on the Nasdaq as well as the Dow Jones, so we are by default looking to sell S&P 500. The Traditional Index has pushed past buy side, so we are bearish. No, we're not seeing anything significant in the marketplace as of yet. Just going to stay tuned, see exactly what price does. What we can do for now is add a price alarm so that we get notified the second the S&P pushes past its buy side liquidity. It might be right now, it might be in 5 minutes time, it might not even be in the AM session. Alright? And that's completely normal. We do not mind, right? Because right now, I would actually prefer for us to get a bearish trading model or a market maker sell model where the S&P 500 fails to take its buy side liquidity level. And the reason I say that is whether or not these assets take these significant liquidity levels determines what type of trade I'm looking for. I'm either looking to take a trade for 1:1. My profit target is 1:1. So if I'm risking $100, I'll be looking to make $100. Likewise, if I'm risking $200, I'll be looking to make $200. Right? Now, if we don't see a significant rate in liquidity on one of these pairs, instead of going 1:1, I'll be targeting 1:2, or I'll be holding that trade for a longer period of time until the asset has not yet taken its significant sell side or buy side. Until that level hits, that's when I'll be looking to hold on to my position. Alright? So for right now, there's nothing significant here. There's nothing that's exactly peaking. We're just going to remain patient. Might be in for a somewhat of a long session in here until noon. So we have approximately 1 hour and 40 minutes left of the session, or 1 hour and 42 minutes if you want to be precise. Right, we've marked out these levels. The Dow Jones does look like it'll probably hit its sell side level first compared to the Nasdaq as well as the S&P 500. So what I'm going to do is start putting some price notifications on all of these significant levels. I've done that on the Dow. Let's do that for the S&P 500. Right, I'm with you. Okay, so it might take me a little bit longer, but I just want to be extremely accurate when it comes to these specific levels. Like I said, I'm OCD, it's just by default. Right, there you go. We are pretty much set. We've got alarms or price alarms for the Nasdaq, we have price alarms for the S&P 500, and we have price alarms for the Dow Jones Industrial Index. So let's once again remain patient, see what the session has. There you guys can see we've just crossed that 760 612 level on the S&P 500, which comes in the form of 100 days high. So now we have made all of the upside potential on every single one of our assets. All right. I'm not looking to go long any one of these. If you guys are looking to trade, my personal preference for you lot is to be bearish, to look for sells and not buys. We do not want to buy past current day high. We might get a very strong push towards the upside, but just from our past experiences, it's not good for us to chase price beyond that level. Okay, it's not good for us to chase price full stop. All right. Let's move back to our chart. Let's see what's happening now. It's a special, very large price action so far. Well, not exactly. We've actually seen very good amounts of volatility, especially in Dow Jones. But I'm not too concerned. I'm also not seeing anything significant here. There aren't any market bars or sell models that have caught my eye. It's not something I'm looking to take. Alright, what we can do here, stop being a little bit creative. So now you guys can see I've our drawn liquidity, which will be salsa. Once again, guys, please bear with me. I'm OCD to the maximum. I promise you, checks. If you look, see my room, yeah, everything has its little designated spot. And may the Lord be with the one who moves myself around. Truly. No, guys, this is only my second ever live stream. I actually have no idea how to look at the chat, whether or not anyone is watching. I don't know how many people are watching, if anyone is watching. I don't know how many people have commented, whether anyone has commented. I don't know how many people have subscribed, if anyone has subscribed. I am merely using this first week as a testing period. It was more so just for me to essentially start, you know. Many people have said to me, whether you start fast, slow, messy, just start. And that was essentially the goal for this week. So I'm fairly chuffed that I've done my first live stream yesterday, and it was approximately 2 hours and 30 minutes. Today's live stream should be round about the same, maybe just over about 2 hours and 35 minutes, give or take. Um, but like I said, as time goes on, I'm fairly certain that my level of expertise is going to yield a very good result for anyone watching these channels, as well as for anyone watching these live streams, as well as for myself. And slowly but surely, I think that we're going to get a lot more people on these specific live streams. And from there, I'll be able to engage with you lot. But for right now, I have no idea how to see your guys' comments, whether you are commenting, whether you're not commenting. So I do apologize for that. I think in the very beginning, I just want to get comfortable in front of the camera. I also just want to get comfortable being able to live stream all of this with you guys. I've been doing this for a very long time, except the conversations that I've been having have all been internal in my head. Whereas now, everything I'm saying in my mind, I am essentially speaking into existence so that we're all on the same page. We all know what my thought process is, and I'm very curious to hear what your guys' thought process is. So, as a tester, if anyone is watching, let me know whether or not you've already executed a trade in this New York AM session, whether you are currently looking to exit or enter a trade, and what exactly your bias is. Maybe you could add what your reasons are, and we could discuss that. I will reply at a later time. Like I said, I apologize. Still getting into the hang of things, but I'm truly elated to be here. I cannot say it enough. So that pretty much brings up today's sponsor, and this video is sponsored by Lord and Savior Jesus Christ. So if you do not know him, I highly recommend you get to know him, and maybe you guys should take this time, thank the Lord, and thank pretty much everything and everyone for who they are, where they are, and what they do. I'm absolutely elated. Said that many times. Just moved into a brand new house, it's a brand new environment, surrounded by brand new individuals, and could not be more happy with where I am. Alright, so if we are looking at the Nasdaq 100 on the left, we can clearly see that we are starting to see somewhat of a down move. There is a rejection of that buy side. Likewise, we can see the same rejection in the S&P 500. Now, even though we are seeing somewhat of a rejection, we have not yet seen a change in the state of delivery. And we need to see a change in state of delivery on at least two of our three assets. Once again, I'm giving you guys the rule of thumb that majority will always outweigh minority. Okay? So we are marking specific swing lows, specific swing highs, and we want to see what price does at these levels. Let's just double check if we don't have any more fundamentals going on there on today. We believe it was just one high impact news event. That is correct. So as you guys can see, the next high impact news event will be at 8 a.m. Eastern Standard Time tomorrow, followed by 10 a.m. Now, of course, that doesn't say 10 a.m. That's just my local time. Completely ignore that. I'm from South Africa. All I want you guys to focus on is Eastern Standard Time. And if you're familiar with what Eastern Standard Time is, it essentially refers to New York. Right? Whenever I make time references, I'll make sure to confirm whether it's local time or Eastern Standard Time. But I assume many of us will be from different areas of the globe, so we'll just stick to Eastern Standard Time as a general rule of thumb moving forward. Now let's see if we can't maybe get a push back up, followed by a liquidity sweep or raid of something swing high, and then we will see a failure sweep or raid on another correlated pair, followed by changes to delivery. I've just said to you guys essentially the entire framework of what I'm looking to do, but there are a couple of things in between that are very important, and ultimately those will also determine whether or not your probability win rate increases or decreases. Like I said, don't focus too much on win rates, it's more so mitigating our loss rate. Alright, so let's change over to the intermediate chart. See exactly what we get here. Ideally, I see a push past this here swing high on the S&P 500, which fails to do so on the Nasdaq 100. Right? That would be ideal for us. Then we want to see a change in state of delivery. But likewise, I don't want to give you guys a framework that has not yet transpired. We'll be sitting here countless times. We're not going to play that. We're trying to predict. We just want to react. All right. Now I know what I'm expecting in price, but all of that will be given to you guys. I'm going to be as open and transparent as humanly possible. Like I said, the entire purpose of these live streams is to essentially show you guys that these markets are both manipulated, but can be understood, can be implemented, and we absolutely can walk away with a reasonable profit. All right. Yesterday was an impeccable start to my live streaming career. We were able to highlight price action in advance. We were able to see it pan out exactly as we would have liked it based off of our levels and understanding. And unfortunately, we weren't able to take that specific trade. I was looking to take the Dow Jones, whereas the trade essentially happened on the S&P 500. But I was looking at the S&P 500 and the Dow. Those were my two married pairs. What I mean by married, it was the majority. Once again, majority against minority. That's how you want to position yourself. Um, but yeah, coulda, woulda, shoulda. Fortunately, I didn't. It's is what it is. But for anyone who was present for that live stream, you would have gotten a excellent example of how technical analysis works. You will have also seen that these markets can be predicted. Okay. Right. So I'm going to highlight exactly what I want to see. Once again, I don't really want to anticipate what price will do before it does it. We want to react, but I want to see this level get rated where S&P successfully takes out this here swing high. It sweeps it with its wick, but it also closes above, which would signify or signal a liquidity raid. Okay. And likewise, I do not want to see it go past this level on the Nasdaq 100. Okay, that is the ideal scenario which plays out. So stay patient and see exactly what price does. I have absolutely no idea what just happened on the S&P 500. I'm very happy I saw that in live. I have absolutely no idea what just happened. Of the 6 years of me doing this, that has never happened. Now, some of you guys won't even know what happened because it happened so bloody quick. If you look at this candle, we all of a sudden just whipped on down. Oh, goodness. What just happened? Just happened, man. What? Anyways, folks, if you're watching live, you saw it here first. I've got no idea what that was. Absolutely no. Uh, yeah. Does it change what we want to do now? No. If you guys would be so kind, just getting a call, you can tell this individual just to chill. Alright, and we are back in action. Just, you know what just happened? That was absolutely ridiculous. I need to message. I need to message someone just to confirm that their chart is showing the same as mine. Because that was pretty ridiculous. Uh, Feedback. You guys will still get to see me. Let's just get confirmation as to whether or not Props just did that. Apologies, you guys should be able to hear me now. Let's just adjust the microphone. Yeah. So we just got confirmation from the Federal Reserve Bank, and they can indeed confirm that previous 5-minute candle found on the S&P 500, which is not looking too good for us, not looking too good at all, because they've essentially just liquidated how many people, um, and any, we no longer have any objectives for the S&P 500. Um, okay, not ideal, not ideal, not ideal at all. Okay, we're also not going to do that. What we will do, not ideal at all. Like I said, I mean, I've been doing this for about 6 years. I've never once seen that happen. I mean, it happened so quick that we didn't even witness the candle go down or come up. It just immediately had a wick. And it's no hefty wick. I mean, if we look at the full scale of things, on a 15-minute chart, it took us good scrolls to essentially, there you go. Prime example. Prime example. We dropped all the way down to the 7,000 level. We went from 7.6 thousand US dollars to $7,000 and quite literally split seconds. All right. Now, there, chaps, You know what? I'm elated that that also just happened because that right there signals that these markets are in some way, shape, or form manipulated. Okay, only manipulation does something like that. There's no other way. Right? It's so crazy. It's like skewed my whole view. But no matter, we can go to the Smith chart from here. Just exactly how they pan out. All right. So as you can see, I drew this line in last time. It was before we saw this specific rate on the S&P 500, and here you guys will see that this market is open. This market is live. Okay. Had this been a unsighted or backtesting model, um, that icon would not be green. That icon is only like that when, or only shows a green dot when the market is live, and this is fresh data being printed currently, right? So there's no way for me to essentially lie or BS to you guys. You see the live signal on the S&P, you can also see it on the Dow Jones Industrial Index, and you will also be able to see it on a larger chart. If we go here, it will show that the market open. There you go. There you go. Market is open. It will close in 6 hours and 17 minutes. Okay. All right. We just want to remain patient for this session right now, or for these next couple of minutes. If I'm completely honest with you guys, which it will be in all these live streams, I do not know what that 5 minute candle was. I have absolutely no idea. I've not seen that ever before. I don't think anyone ever has seen that before. I mean, the range that it was able to cover in quite literally a second. I mean, as soon as the candle printed, that wick was already in place. Not even 5 seconds, not even 2 seconds. Literally, the second it opened, it did that. So, if you not hear any news coming out that there's been some insider trading, I think you just witnessed it live if you're watching the stream, which is not good, which is not bad, but it has essentially just hit every single price objective I was aiming to go for, which now means that we cannot trade the S&P 500, we can only trade the Nasdaq 100 because we still have salsa open, and we can also only trade the Dow Jones Industrial Index because we have salsa also open. So what I'll do here is essentially take it away. Okay. Alright, so let's see what is going on here. Nothing significant once again. I mean, I still can't believe that 5 minute candle. There was no news. Someone clearly tweet. I'd be fairly interested to hear what the rest of the so-called gurus online will make of that. Unfortunate. Very unfortunate, to be honest. But it's tough. I'm just trying to make up my mind exactly what I need to see for me to go short. Now, the unfortunate thing is that the S&P 500 was probably my best candidate to go short. But like we've said numerous times on that wick was just detrimental to anyone who has been holding their positions over the last couple of days. Anyone who has been holding their longs over the last couple, or buying positions over the last couple of days. Very happy that I am a short-term trader, especially after seeing something like that. We're just going to have to remain patient. Hopefully, we can see a setup on at least two of the other three. I'm very curious to find out exactly what happened on the S&P. I'm also very happy that I live streamed this specific day because now we can all see, we can all look back on it, or at least I can. And yeah, that quite literally happened in like a second. In 1 second, we dropped, I don't know how many points, but it was a lot. A lot of money has just been stolen. I hope you guys know that. Bucket loads of cash, chaps. Truly. Whoever took that trade, hmm, but still not made enough money to buy back your soul, chat. But we're out here. We are out here. So it is currently 10 to 11 Eastern Standard Time. We have not seen, well, we've actually seen probably the biggest trade in the history of the market, and it all happened in 1 second. So not even 1 second, quite literally not even 1 second. Like I said, candle opened and the wick was there. And it's just crazy to me how not one of the other assets were able to do that. I mean, even the price alarm I put for the sell side of the S&P 500 only triggered like 10 seconds after it actually happened. So, yeah, guys, we just saw one of the best trades ever. I mean, it's absolutely crazy. If I go here on the full screen, it's literally going to be every single time I go to the S&P 500. I mean, if I go from the NASDAQ and I press the key, keyboard, goes straight to the Dow Jones, you see that the chart is relatively the same, meaning it's the same spacing, everything is cropped to the right size. See, NQ, YM, as soon as we go up to the S&P 500, it just does that. And there's no way around it. There's literally no way around it. The only way that we can see an identical chart is if we once again go to our intimate chart over here Again, I apologize. I don't know why I called it intimate chart. It's just because we can see all of them together. Uh, we'll just say the family view instead of intimate chart because I know some of you are rather immature, such as myself. Um, so just gonna remain patient. We'll see how things go. Apologies for the lack of commentary. I'm just trying to find out what is going on and why exactly that candle happened. It's really got me curious. It's got me curious because I wanted to be in that trade. I mean, damn, to her to take profit that big in 1 sec. Who wouldn't want to be involved? Not jokes aside, I do want to find out exactly what that was and why it happened. It's not good. It's not good at all. That has essentially hindered our entire training session because trade that I was really looking to take was one that I highlighted here. We would see a raid in the S&P 500, taking out this string high over here, also closing above, which is exactly what it did on the 5-minute chart. Just like I said, as soon as the 5-minute chart opened, we had already experienced that wick. The price notifications then came through, and it essentially invalidated that specific setup straight away. And it was looking so clean. But yeah, once again, you don't really want to get in the habit of predicting price. We much rather want to stay patient, look for price to trade to specific levels, and thereafter we want to react from these specific levels. So guys, name of the game, be patient. All right. It's all about persisting, securing moral compromise. So right now, we need to just weather the storm. We can see that the S&P after its manipulated leg, the form of this here wick, is now it reversed towards the upside. We can see the same thing in the Dow Jones Industrial Index found on the right of your screens. And you can also see that the NASDAQ 100 is also starting to rally up compared to the rest of them. I'd say the NASDAQ is the weaker one, or perhaps the Dow Jones Industrial Index, because it took us a fairly deep retracement over here before now wanting to expand towards the upside. So we're going to remain patient once again. My bias will, however, not change. I'm going to remain bearish across all three of my indice pairs. I will, however, not be taking any trades on the S&P 500 because it has raided both the buy side liquidity in form of current day high, and it has also taken sell side liquidity in form of current day low. So this fades for me. I'm done for the day. Let's put that little caption here, and let's put a big emphasis on the unhappy face because we are somewhat dying inside. We were really hoping to take either a trade on the S&P 500 or the NASDAQ 100. It's a bit unfortunate, but such is life. Such is life. You can, however, still see a market Excel model on our Dow Jones on the right hand of your screens, or we can see a market Excel model on the left hand side of your screens showing the NASDAQ 100. But for right now, I'm going to go to the bigger time frames. We're going to look at and set that is not the S&P 500. S&P 500 is just going to break my screen every time I have to look at it, as well as my heart. It's hilarious, man. Truly. It's probably Trump's latte who made that trade. Or actually cares, whoever you are. Well done, mate. Gotta give credit where it's due, ladies and gentlemen. And that was an exceptional trade, whoever caught that. Guys, let it be known that these markets are manipulated. This type of price action does not happen in a fair environment. Okay? Or even look at the 24-hour view. It's ridiculous. You've essentially wiped out all the sell side liquidity as far back as the 22nd of April 2026. That is more than a month ago. Don't quote me on this, but I'm going to guess it's about a month and 10 days if I just think about it off the top of my head. But, anyways, it's a long period of time. Each one of these candles is representing one day, 24 hours in order to form the end of each of these candles or to form the completed candle. I'll say it like that. And you can see that anyone who has gone long or bought and essentially trailed their stops or kept their position for longer term gains has been wiped out within seconds. And with a move like that that happens that quick, there is definitely going to be slippage. And slippage essentially refers to when price moves so rapid that it goes completely past your stop loss and you lose more money than you've essentially budgeted for or planned for, which is not a good thing at all. And that's what happened. That's exactly what's happened. That's why I'm making it such a big deal. Because from a outsider's perspective, I don't think the nuanced trader will understand exactly how much money was just stolen from people, bailout robbery. But I love it. I don't know. I love to see it. Truly, it's like I said, it's all absolutely manipulated, absolutely be understood. And as time goes by and we understand them, we should look at that. Price has just fixed itself. There is no longer a wick. You guys saw that, right? Let's go back to the 24-hour view that we were just looking at. And now there is no more wick. Zero wicks. He stated that it took out the liquidity below the 22nd of April 2026, and now you can see there's not even a wick. It's not even traded past previous days high or previous days low. Man, I'd love to see it. Absolutely love to see it. I mean, it's absolute agony if you were in a position and that move was actually real. But it's good for us because instead of saying we are done for the day, we are once again going to go back to our original bias of being bearish. All right, pretty excited for that one. Never seen it happen. Don't really know what to make of it. I'm in a state of awe, disbelief, satisfaction, and pure terror. Let's see if I can't find out exactly what that candle was. Maybe there was a tweet that went out. Because if you're watching this, comment down below what you think that was. Maybe you guys have some inside information. Maybe you lot are the guys who secretly took that trade and just wiped the market clean to essentially cover your tracks. If so, you should consider making a mentorship. I'd be very interested. I'd be extremely interested if I could catch those trades in 1 second and then cover my tracks to where the candle doesn't even show the wick or the move. I mean, what can one say? Well, so we are continuously going higher on all three of our assets at this very given moment in time. Now here we can still see the wick, which is amazing. See, something's wrong here now. A data issue. Right, let's refresh. See if there's any change up. If it does, right, so it has obviously changed that, but it's not changed our view. We want to go to charts. And it's still, yeah, still giving us a data issue. Very strange. Very strange. And this chart's also giving us a data issue. I'm not sure what's going on. Because if you look at the Dow Jones Industrial Index, we can see that market is live, all right? Whenever there's a green icon like this, you'll know that whoever you are watching as a trader is doing it live. Market is live. As you guys can see, the times match up. Everything matches up. Right? Everything matches up. For some odd reason, it's just the data displayed on the S&P 500 is not accurate. It's giving us warning signs, which is not good at all. I mean, I've never seen that before. We're working on removing incorrect intraday data. We're essentially covering the tracks. Okay. We switch over to the daily chart in the meantime. Show everybody do that. Okay, well, there you go. It does look like it just seems to be easy on the chart. So if we switch back to the 5 minute chart on the S&P 500 and see if it's been cleared. No, still not been cleared, but as you can see, the data wick that came out, I don't know if it was data wick. We usually refer to data wicks as these high economic news events that come out and they give us a very big wick. It's usually at about 8:30 Eastern Standard Time. And a good example of that will probably be Friday's NFP, non-farmer payroll data. Those data candles are usually on a high economic news driven injection, which comes in the form of these news releases or economic news releases. Okay, and we find those on either my FX book or we can go to Forex Factory. Let's just do that together, guys. Right. I haven't used this in such a long time. Calendar. And then we want to filter out because we are only trading the stock indices futures. We understand that the S&P 500 is the top US stocks. The Nasdaq is the top US tech stocks. Likewise, the Dow Jones is USD American. So we are not concerned with any of these. We do look for non-economic because that usually refers to like public holidays and things like that. It's very important to know when there's a bank holiday because those specific days never give us fruitful price. So let's go. All right, here you can see 4 p.m. Don't worry, this is all local time once again. 4 p.m. my time is 10 a.m. Eastern Standard Time. All right, so we can also see that on Wednesday we are going to have non-farmer employment change, but that is not the proper or perhaps it is. Did I got it wrong? No. Yeah, NFP. Okay, non-farm employment change. Once again, guys, it's not so much the news event itself that comes out. You just want to make sure that you are aware that all of these red indicate high impact. All right, and we want to make sure we are clued up as to when it is going to come out. All right, like we've seen today, we had news come in at 10 a.m. And if we look at 10 a.m.'s candle on the 5-minute chart, you can see it's this one here. It's nothing new, nothing special, nothing significant, but it's just always important for us to be clued on. We want to know exactly when these specific news events come out, so that we can position ourselves accordingly. Likewise, if we are on a trade already and a news event is expected to come out within the next 5 minutes, 10 minutes, 15 minutes, then you do want to act with a little bit more caution, perhaps take partials, strategy stock, or go break even. Completely up to you. But my advice would be to go into a defensive formation. So, I mean, you slowly, surely try and take as much risk as you can off of the table in order to just buy a safer approach, because we never really know what these specific high impact news events are going to do. So what I'm doing now, apologies for the lack of commentary once again, I'm just trying to pan out exactly what needs to happen in order for me to go short, because I am only looking to go short. It's just rather confusing at the moment because of that intraday 5-minute candle. We've never seen something like that. I've also never really experienced a the data feed like we see here. It's it's a bit confusing because on every single other time frame we don't exactly get that issue at all. I mean, the 15-minute chart looks good. Technically, even the 5-minute chart looks good now. They've obviously fixed that way. But if we look at our family, yeah, there you see it. All right, as soon as I change, but it quickly matter will change. I'll sneaky look up. We'll allow it because there's nothing we can do to change it. You guys can clearly see the data issue one over here, which is not a good thing. Again, not exactly a bad thing right now because the chart itself doesn't look to be broken in any way. Um, it's obviously just a bit strange with what happened with that specific 5-minute candle, but I will be doing my own due diligence as soon as the stream ends, and I'll keep you guys in the loop. I'll inform you on tomorrow's live stream, which will be at 9:25 Eastern Standard Time. Again, we are going to be streaming absolutely every single weekday from approximately 9:25 a.m. to noon Eastern Standard Time. I once again want to apologize. I was a couple of minutes late today. I'll make sure to not let that happen tomorrow. I'm just busy trying out a few things, making a few changes behind the scenes in order to make sure that these lectures are the most valuable. You guys get on the whole of YouTube. Now, Lord knows they're not going to be starting live streams because trading in itself is not exciting, but that's a good thing because we understand that excitement is backed by emotion, and money and emotion is like vodka and milk, as Mob Deep would like to say. They just don't mix too well. Okay, we want to make trading a very mechanical faculty in our approach. Not in our approach, perhaps absolutely serious sense. Bottom line, just we want to remove all of the emotion from the table. Okay, we're dealing with money, and money is going to fluctuate. I guarantee you guys, when you get in a position of floating profit, you guys are going to struggle. You're going to find that your emotions somewhat kick in because by default, human beings are just loss adverse. We would rather lose $100 than $200, knowing full well we are in a position to make money. All right, it's a fear-driven concept. It is just by nature in almost every single human being, especially people that I've come into contact with. By default, we are loss adverse. And also by default, loss adverse individuals are just not profitable in this industry. You do need to make calculated risk. You do need to have the willpower in order to sit through those periods of drawdown or even unrealized gains, which come in the form of floating profit. And from our personal experience, floating profit is a lot harder to deal with than a floating loss. With a floating loss, you still have that optimistic side of you that believes that their certain approach is still right. Whereas in a floating loss, you immediately become conscious as to the loss that could potentially happen. You're in a place of gain, and it could essentially go backwards on you. You could lose out on your profits, and then you could be put in a loss, which is not something anyone wants to go through. But that's exactly where you need to do, or that's exactly why you need to gather data through quantitative analysis, backtest specific strategies to see exactly what works, what doesn't work, and that will give you confidence in the marketplace. That's exactly what's going to mitigate all of your emotions from taking over and influencing your thought process, because trading is 100% a decision based game. We could sit here for 10 hours, whereas another individual could sit here for 15 minutes. And the individual who sits here for 15 minutes could make a very informed decision based off of the data that they've gotten to get a better net profit or better net position day, however you want to call it. They'll have a better performing day than the person who sat here for 10 hours. Unfortunately, trading does not reward you on hard work. It is all smart work related. It is 100% comes down to the decisions you make every single day. So your intellect plays a profound part. Your intellect plays a profound part in your profitability performance from an intraday perspective, especially as a day trader such as myself. We are in, we are out in the same day. We make a decision to get in the marketplace and we make a decision to get out of the marketplace all in the same day. Bottom line, you're going to be making a lot of decisions. You want to make sure you position yourself in an area where there are limited distractions, where there are limited sounds, a place of peace and prayer, where all are welcome. When time comes, you're going to have to step away. You're going to have to tell your friends, your family, your loved ones, whoever it may be, that it is time for me to lock in. So if we're looking at the charts right now, the Nasdaq 100 has just given us a vicious wick towards the downside, but is currently bullish on this candle. Bear in mind, we have approximately 40 seconds left of this 5-minute candle to close. But for right now, I'm not seeing anything significant in the charts. I am bearish on NQES as well as the Dow Jones Industrial Index. So I am only looking to sell this market. All right. Whether we get that specific sell setup in today's session, time will tell. We are not interested in chasing price towards the upside. I no longer have any upside objective since price has been traded on both the Nasdaq, as we can see here, the S&P 500, as well as the Dow Jones have all traded past current day high. So I want to position myself as a contrarian trader, meaning I am going against the grain, where most people will be looking to trade these breakouts, and they could probably be profitable. I mean, right now, it looks like everything is going in your lot's favor, so I commemorate you. Congratulations. But from a quantitative standpoint and the data that I've got behind my specific approach to this marketplace, it's not something I want to do. I've been caught many times in the past by chasing price. And it's a very frustrating thing to go through, especially when you take the loss. You sit there, you know that it wasn't your plan. You are extremely annoyed that you allowed yourself to make that decision. And unfortunately, in this industry, you do have to lose money in order to learn that specific lesson. Or you could sit on your hands, be patient, learn the same lesson without actually taking the trade. But that goes one of two ways. Right? You could choose not to take a trade. It could go in your favor. Um, in which case you could still learn a lesson. But bottom line, you do want to really track as much as you can because that is essentially what's going to give you that feedback, that data, and that's what's going to allow you to essentially optimize your approach in order to get ideal results. Okay. If we're looking at the S&P 500, I have noticed that my icon has once again changed to market open. So they have clearly covered their tracks. Alright. I don't believe any lie that they told me. They stole money. Alright. They know it, regardless of the excuse they put. We all know it. Okay. Don't know what to say. Speechless for the first time in my life. All the haters will probably rejoice now, but hey, is what it is, man. Now, checking my newsfeed, I can't see anything. Alright, I have not been informed on any significant event that occurred at that specific time. So we're just gonna have to be patient, as always. See if we can get a setup with the remainder of the session. We have just shy of 45 minutes left to go. 42 minutes, if we want to be accurate, until the session ends for me. A lot could happen in these next couple minutes, or nothing could happen in these next couple minutes. Time will tell, as usual. If you guys would be so kind as to excuse me, I just want to run off to the loo. I'll be back. ETA. See you soon. Alright, guys, we are back in action. What have I missed out on here? It's a little showy. Right, so that 5 minute candle is now closed. We are just continuously going higher on all three of our indice pairs. Not a good thing, not a bad thing. It doesn't really mean anything right now because we are not in a trade. Okay? We're remaining patient. This This is a prime example of how we have a plan and we are sticking to set plan regardless of what price does. All right. We have no way of predicting what price does. All we are concerned about is reacting from specific levels at specific times. That is essentially the name of the game. Now, whether or not price gets to those levels, it's not on our control. Okay? Our job is essentially to come here every single day, to lock it in during this set session, and to do absolutely everything we can to position ourselves in a profitable scenario by doing accurate due diligence on both a fundamental, technical, and quantitative analysis. Okay? Right, so we're going to go full screen. We're going to get a bit of and see if we got traded past previous day high. No, we're about to. Okay, we're about to hit previous day high on the S&P 500. If I'm not mistaken, that will be all-time high. As explained. The Nasdaq 100 balance, we are very close to hitting that previous day high, and we'll put some indications there. We'll also label it as outside liquidity in the form of previous day high. And likewise with the S&P 500, we are also just shy of hitting a specific level. Probably will do so in the coming minutes, if not immediately. And the Dow Jones Industrial Index is also just shy of all-time highs. Now, with these magnets, don't worry about those. Those are for our family chart, which is essentially where we split screen in three to showcase Nasdaq, S&P, and the Dow Jones simultaneously. And the reason I do that is so that you guys have a good indication as to how each market is correlated, as well as price action across all 3 days at the same time. Okay, so what we're going to do now, we're going to go back to our family group or family screen. Maybe come up with a better name. That's which I've been referring to. So, anyways. It's important to note that even if we see some form of rejection after we trade past our says current day highs, should say previous day high. There you go. Now, even if we get some form of rejection from our previous day high, that's still not enough for me to get into the market. All right. I am looking for a liquidity purge on a intraday perspective. Okay. So previous day high refers to previous day high. This happened yesterday. Okay. When I say intraday, I am referring to today. I am referring to Tuesday, the 2nd of June, 2026. Okay. And what I mean, I'll show you exactly what I mean by that from a technical standpoint. I'm looking for a cracking correlation within this period over here. Okay. Anything right of this red dotted line. That red dotted line essentially marks 2 days trading. Okay. That's new day open. New day open happens at 6 p.m. Eastern Standard Time. All right. So as you can see here on the Nasdaq, I've dotted that red line to show today's trading session. Then on the S&P 500, I've also drawn that red dotted line at 6 p.m. Eastern Standard Time to show all of the intraday price action, as well as with the Dow Jones, you see the exact same thing. Okay, now I need to see a cracking correlation between all of these, as well as a change in state of delivery on majority of our assets, all within today. So the buy side liquidity in the form of previous days high does not qualify. Okay, I've been burned in the past by trying to trade these smaller time frames using a much bigger time horizon, and it's just not in my favor. I walked away with a bruise on the chin, didn't feel good. at all. Had to sit there. It was a long sleepless night trying to essentially understand why I went wrong. And that was the conclusion I came to because I went to all the days where I was profitable, and in every single one of those days, the tracking correlation came from intraday price action, meaning today. Okay, so I would need to see a rate of liquidity on an intraday perspective of all of our assets. But here comes OCD. You're going to make sure. We just have to make sure. It's my insanity. And if I'm saying you'll be profitable, I'm saying in your present you'll be profitable. So yeah, you're going to be putting these live streams in order to get all the new. It's completely free, guys. To comment is free, subscribe is free, to like is free, to dislike is free, and to block this channel is free, which gives me some form of feedback. And I'm using your feedback to gather more quantitative analysis of what works and what doesn't work for these specific live streams. Alright? It's all about data with me. I'm in this guy, always have been. If the Lord allows it, I always will be. And it's just how things are going to go on this specific channel. So if you like the sound of that, like, subscribe, comment down below, share it with a friend, family, your auntie, your uncle, creature, a crawler, you name it. So we're seeing a slight retracement on the Nasdaq 100 was our S&P 500. What we're going to do is go over to our family display, and you can see all three brothers and sisters in arms traveling together. The three musketeers. You know what? That's it. That is 100%. We just cracked it. That's the name of this specific display. The three musketeer, or the musketeer display. I like that. It's got a good ring. It sounds very nice. It's been in the thingy display. It's also a lot better in the internet display. You know, anyways, guys, I'm trying to repeat, it's hard out here. Yeah, we are trying. Bottom line, we are trying, chaps. So we have about 32 minutes left of today's trading session. As soon as we hit noon, this AM session will pretty much conclude itself. If we do not get a position by then, it will be somewhat unfortunate, but I will see you guys again for tomorrow's live stream, which will take place at 9:25 a.m. Eastern Standard Time. Once again, we will trade from 9 a.m. Eastern Standard Time to about noon. I say trade, but we will be present on the charts during that specific time as well. It's approximately 2 hours and 35 minutes for the entire session. It's completely up to you guys if you want to take part in it, if you want to be there. Awesome. If not, all love and peace be to you, brother, sister, aunties, and uncles. I'm still trying to see what exactly that 5 minute wick was. If I'm mistaken, it was this 5 minute candle right here, 10:30. It was stupendous. It was the biggest wick I've ever seen. No, nothing. Absolutely nothing. I guess whoever stole the money's laughing to the bank right now. Good, 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 good. Futures, you're a bit boring today. Let's see, Forex. Forex is always boring. The exchange rates. All right, you'll see that all of these have a common quote currency, and that is all the ZAR, which is the South African rand. I'm a South African individual, so I just obviously want to see what my own currency is doing compared to the world, and it's not doing too great. I mean, my currency is doing pretty good, which I don't really like. I mean, if you make foreign currency, you essentially want your homeland currency to remain weak. That way, your purchasing power is just a lot stronger. But, chaps, the dollar controls everything. If the dollar fluctuates and essentially declines in value, so do all other fiat currencies. They may not decline at the same rate because some fiat currencies are backed by raw minerals found in their specific countries. A good example is the Swiss franc. They have their currency to buy their gold reserves, not completely, so they will still have a decline, but they are the slowest declining fiat currency. So the US dollar is just dying at the moment. I don't really understand it because, in my understanding, the United States is just conquering everyone as per usual. But, anyways, then we have Bitcoin currently at 67,000 US dollars, very low. There's a lot of speculation around this specific currency. A lot of talk about Epstein and the boys. Sorry I even mentioned that name. Never again. Right, we have Ethereum, we have Ripple. No, I'm not familiar with Ripple at all. I could not care less about crypto, to be honest with you. I'm not too fussed about it. What I am interested in are the minerals like gold, silver, and oil. Now, crude oil is very, very, very important because the amount of derivatives that come from crude oil are pretty extraordinary. I mean, you get petrol, diesel, natural gas, you get tarmac. The list goes on. I think there's about 7 different derivatives that come from one raw material in crude oil. So any country that has oil has options. All right. And the unfortunate thing is that the price of crude oil has massive ramifications for the rest of the world economy because of the amount of derivatives that come from this one specific mineral. Now, silver also extremely important. I really do think it is undervalued somewhat because of the amount of technology that is in today's world, like your phone, your laptop, monitors, TVs, microwaves, fridges. Every single utensil you have around your home has silver. All right. Now, the same cannot be said for gold. To be honest with you, I've never really understood the value of gold and why it is so valuable. People say it's God's money. Everything is God's. So, you know, um, I really just don't understand the value that gold has. I mean, it's shiny, but that's pretty much it. Gold is not on my phone. Gold is not on this microphone. Gold is not on this laptop. Gold is not on this light. You know what I mean? But anyways, we don't have to understand it. We just need to know that it is a valuable asset. It is a very, very, very good way to store one's capital. In my opinion, all money should be stored in gold or silver, some form of precious metal instead of a fiat currency. We understand that governments are dying. Fiat currencies are dying with them. Fiat currencies are infinite and that they can be printed out at a rapid rate. Whereas gold can't, silver can't, oil can't. All right, they all have a specific amount tied to them, and that's essentially where their value comes from. So maybe I've just answered my own question with regards to gold, but once again, I understand why silver is important. I don't understand why gold is more important than silver because, like I said, silver is utilized a lot more than gold. Oil, self-explanatory. I don't actually understand why oil is not the most important one because of all of the derivatives that come from this one raw material. What I do know is that this is where I thrive. the Nasdaq, the S&P, and the Dow Jones Industrial Index. So let's switch over to the 30-month CTS, see what's happening. We do have a retracement lower, which I am a big fan of. Now, if we look at the Nasdaq 100, we've just taken out this swing high, right? And it is a common swing high found on the S&P 500. We have not only swept the high, but we also look like we have closed above it as well. So a sweep with a wick is a liquidity sweep. Once we close above that specific swing high, I consider that as a liquidity rate. And if we can get S&T where the one is unable to sweep and close above, and a closely correlated pair does the opposite, because that to me is a liquidity purge, and it signals a potential change in state of delivery. All right. Now, completely dependent on how this 5-minute candle closes here, will depend on whether or not we go in for this trade. All right. We're going to stay patient. We can see exactly what price does. All right, so right now I'm busy having an internal discussion in my mind as to what needs to happen in order for me to qualify a short setup. Okay, and ideally we see a bullish close of this 5-minute candle on the Nasdaq, which you can see on the left of your charts, as well as the S&P 500, which you can see in the middle of your charts. I am not currently looking at the Dow Jones Industrial Index. I'm not too concerned with that pair. I am, however, looking at our two charts on the left as well as the right. Once again, the middle chart shows us the S&P 500, all right, and the left chart shows us the Nasdaq 100. When I say that this 5-minute candle ideally closes bullish, it's going to close green, all right. Once again, think of a bull's horns go up, a bear's claws come down. Bearish bias refers to me wanting to sell. A bullish bias refers to me wanting to buy. All right, we're going to add some lipstick on the chart just so you guys have a idea of what exactly I'm looking at. Makes sense? Because we are looking at the swing higher. Just follow that little dotted line. You see that both of them reflect the exact same time. It's 11:20, right? That's the swing low I'm currently looking at. Now, does not look like we are going to get that bullish close. Not good at all. That range immediately invalidates this fixator. Unfortunate, but we are coming towards the end. We have approximately 20 minutes remaining of today's AM session. Fingers crossed we do get a setup. If we don't, such as life, it's part of the game. We remain patient. We're going to come back tomorrow. I'd like to remind absolutely everyone that we're going to be doing live streams every single week weekday, Monday through to Friday at 9:25 a.m. Eastern Standard Time, and that'll run up to 12 p.m. Eastern Standard Time. So it's approximately 2 hours, 35 minutes of live streams. Yes, it is somewhat long, and yes, it is value driven. Okay, so stay tuned, prepared, and let's see how the rest of the week goes. Yesterday was a brilliant live stream. I do encourage you guys to go check it out. I also don't, because I was trying to still figure out everything, the whole setup, the microphone, the webcam, you name it. Right now, the webcam is not the best, okay? You're still playing around with things, giving myself this first week essentially just to try and error, see what I like, see what I don't like, watch every single live stream in order to get feedback from myself as to what I can improve on, what I think was good, what I think was bad, and ultimately from there, we're just going to keep improving. But I'm going to need your help. I'm going to need you guys to comment. I'm going to need you guys to like, dislike, do whatever. Engagement, any form of engagement is very much appreciated at the specific point in time. Like I say, I'm in the early stages, and for me, in the early stages, journaling is super important. So if we look at the price, we can see that the Nasdaq is currently showing strength. It is moving further and further towards our buy side liquidity in form of previous day high. We can see that the S&P 500 has traded just short of that specific previous day high. The Dow Jones Industrial Index is also short. We're seeing slight retracements across all of our assets, or namely two of them being the S&P 500 that you can see in the middle of your screen, as well as the Dow Jones, which you can see on the right of your screen. As we are approximately 18 and a half minutes away from noon, we just want to remain patient. The odds of us now getting a trade this late on in the session are extremely low, but we still want to remain vigilant. We understand that anything can happen in these markets. We've essentially seen that in today's live stream with that enormous wick which occurred earlier on. I believe it was at 10. Yeah, 10's 5-minute candle was just absolutely ridiculous, and I did get confirmation from a third party that they were seeing the exact same thing on their screen, which is just remarkable. And the fact that they've covered it up is just funny and cruel. But fortunately, we did not take a loss on that specific one, so we're going to stay patient as always. We can see exactly what past does. It does seem that we are going to see one last push towards that past liquidity. And this liquidity comes in the form of all-time highs across all three assets, namely the Nasdaq 100, the S&P 500, as well as the Dow Jones Industrial Index. So let's see what price does. We have approximately 1 minute and 20 seconds, give or take, until the end of this 5-minute candle. Of the three assets we are currently looking at now, I would estimate that the Nasdaq 100 will probably hit previous day high before the other correlated pairs. But the Dow Jones Industrial Index does seem to be rejecting the support line as we speak. Obviously, there are still about 50 seconds left of this 5-minute candle. Anything could happen at this point, but we are seeing strength across all three of our assets, which is a good thing. Well, it's a neutral thing because we are not in a position. It's absolutely remarkable how we've been seeing all-time highs met day in, day out on not only one pair, but three of our pairs, all of which are very closely correlated. It's good news for us because at these all-time highs is major liquidity, and more often than not, once price hits all-time highs, we will see a significant retracement, which once again just gives us more liquidity. All right, I view all-time highs as external range liquidity, and my understanding is that price will move from internal range liquidity all the way to external, and once again from external to internal. Okay, I want you guys to view these specific buy side liquidity levels that I highlight every single day in these sessions as external range liquidity, and anything which lies within that is internal. All right. We will cover more on that as time progresses. It's just important for me to highlight basic terminology, basic concepts, so that we are better aligned with one another. And thereafter, we can use these live streams, or you guys can use, well, both of us essentially. I'll use it as feedback, and you guys can learn it or use it as a lesson to see exactly how all of these concepts coincide and how we implement all of them on a daily basis, and ultimately how all of these contribute towards profitability in the market. That's what we're after. Okay, it's not about making 10,000 in one trade. It's all about consistency. All right, you need to understand that you're in an industry that is completely dependent on how much capital you have on display or have access to at that specific point in time. Now, with the amount of money being thrown around the world, I can almost guarantee that there is no shortage of it. There is no shortage of investors looking to park their money with someone who is profitable. So, as a nuanced trader, a beginner, a novice, intermediate, whatever you want to call yourself, it doesn't matter who you are, how long you've been doing this. Absolutely every single trader has the exact same goal in mind, and that is to be profitable and to be profitable on a consistent basis. So, that is what we're striving for. Now, we have approximately 13 minutes left of today's session. It's a bit unfortunate. We've not exactly gotten our setup today. We've seen tremendous price action, especially on the S&P at 10:30 with that wick that has now miraculous. It's gone. Bottom line, I was trying to say miraculous, but English got the best of me. Frustrates me when I do that, but such is life. We're up 2 minutes, 30 seconds roughly for the end of this candle's close. This will be the end of the 5 minute candle. What I'm going to do now is shift over to a bigger view. We'll start looking through our high time frames. See if this is something you might have missed in the uh, earlier parts of the session. I don't think so. Like I said, I have a very strict model, a very strict approach to these specific assets, namely the Nasdaq, S&P, as well as the Dow. We have very strong upside on the S&P 500 as well as the Nasdaq and also the Dow Jones Industrial Index. Now, let's pan out to a 24. Apologies. Let's pan out to a 24-hour view, and you guys will see that we are about to hit some hours. Okay. Doesn't really help you got all of this. Let's take a look at it. Let's get rid of dollar. Please just refer to the actual asset. It will always show you the interval. Okay, 15 minute. 5 minutes. All right, let's go back to our theme success. See if we can see something on the lower time frames. Right, we are definitely not going to get a trade in this session. We are 3 minutes shy of the close of this 5 minute candle. Regardless of what this 5 minute candle does, I cannot see any possible trade scenario panning out within the next 8 minutes until 12 a.m. Eastern Standard Time, 12 p.m. Apologies, noon Eastern Standard Time. So guys, I think it's safe to say we are going to wrap it up a little bit earlier, about 5 minutes or 8 minutes earlier, just because there are no trade setups. There's nothing that piques my interest right now. I'm not interested in taking any longs. I'm not interested in buying, simply because we've taken so much buy side. The only other liquidity left is external. And I know I've said that I look to trade from internal to external, from external to internal, but all of that refers to intraday price action, right? I'm a day trader, so I'm only looking at today's price action, okay? And today's price action starts from, well, it's delineated here. Show you guys. It's this entire street you can see here. Alright. Oh wait, my face is gonna be in the way. Change that up again. A little bit sharp because I'm OCD. Right. So that's gonna do all time lines. As you can see now, I've drawn a line at 6 p.m. Eastern Standard Time. No, 6 p.m. starts the trade chart, alright? Now, first to today's trading range. Now, we can see that there is a gap here. That's a new day open gap. Okay, it's very normal. They happen almost every day. It's not every day. I myself do not trade them. I'm only interested in 9:30 Eastern Standard Time. Right, 9:30 Eastern Standard Time is the open of the bond market. More often than not, we will see some form of liquidity purge followed by a change in state of delivery. And that is why it's super important for us to understand what our draw on liquidity is. And I've highlighted to you guys what exactly these draws of liquidity are. They come in the form of buy side or sell side liquidity. Okay, it's either currently high, currently low, previous day high, previous day low. Now, personally, as a day trader, I'm interested in today's price action, okay, which would be currently high, currently low. Just never got to set up to want to go back for some liquidity, which is exactly why I placed the magnet here. Okay, that is my draw liquidity. Hence, I put bearish bias. Now, as a prime example, we have no control over the market. We're not trying to predict. We're trying to react. And there were no significant reactions in today's price action. So it looks like we are going to leave here our trade setup. Okay, it's completely normal. These things tend to happen every single, well, not every single day. More often than not, you won't be taking a trade. Okay, it's like I said previously, profitability come down to what decisions you make. And if I told you choosing not to act was one of the most important decisions you could make in trading, you probably wouldn't believe me. But if you made a uninformed decision, took a trade, took a loss, then you would believe me. Because deep down you know you shouldn't have acted and you did. Okay? So there'd be a lesson. Today's lesson is all about being patient. Every single day goes by, we are just growing. Okay? We're constantly growing, constantly getting feedback, and we're constantly optimizing. All right? Just thank you guys for your attendance. I want to commemorate absolutely everyone who is still here watching this live stream right now. I know it's been a long session. I know it's been somewhat lackluster, even though we have seen a volatile market and price has continued towards the upside. And as we speak, is about to hit all-time highs on the Nasdaq. We have got on the trade set, and for good reason. I previously iterated the importance of quantitative analysis, and I have done due diligence. I have back tested a specific approach in the marketplace, which has allowed me to call myself profitable. And that specific approach and that specific strategy is not panned out today. All right, these things happen. It's completely normal. If you're not used to that, get used to it. Right, that is trading. Our job is to once again come back tomorrow at 9:25 a.m. Eastern Standard Time to lock in as we have today. So I'll see you then, guys. Have a fantastic day. Please send my regards to all your friends, your loved ones. They won't know who I am. They do know the Lord, and He is today's sponsor, as He is every everyday sponsor. So big shout out to him, chaps. That pretty much ends today's stream. I love you lots. Take care, and I will see you in tomorrow's stream. Cheers.